And I think the key macro to me is it's very obvious. Risk appetite's been improving. I know this has been a rally that has been hated, but let me just give you three things that tell me risk appetite's improved or should be improving. If you're cautious, you should be less cautious. The first is that Bitcoin is made all-time highs, and it's a leading indicator for the S&P 500. So I think that equities are going to follow this all-time high in Bitcoin. And Bitcoin's rise has a lot to do with central bank liquidity. I think that this is still the most hated rally, but I think it means there's still upside. It is, again, as you can tell, you could look around, you've got many people who are skeptical. Skepticism is not a sign of a top. That's a sign of markets that have a lot of firepower left.
Tom Lee delivers a compelling and in-depth market analysis, highlighting a notable surge in risk appetite. He emphasizes the resilience of corporate America and the growing recognition of Bitcoin as a legitimate macro asset, even amid ongoing skepticism. This market rally, he argues, isn't just hype. It's grounded in solid fundamentals, from the explosive growth in semiconductors to the revival of IPO activity. And before that, be the one who says, I was here before 100K. I'm on a mission to hit 100,000 subs before 2025 ends. Help me get there. Subscribe now and drop your thoughts on the market in the comments. Let's grow and win together.
The top 5 performers in the past week have been KLA Tencor, Alphabet, Oracle, Palantir, and Cadence Design Systems. Now, KLA's rally is really because semis have been doing really well. And I think semis are doing well because the trade war between the US and China is largely over. And in fact, semiconductor stocks look like they are about to break to all-time highs, which is a good sign. Now, in terms of the worst performers, it's Apple, GE, Costco, Intuitive Surgical, and Progressive Corp. Progressives, I think, suffering because insurance rates aren't rising the way they were last year. So that is having some headwinds for them. But still, year to date, Progressive is up almost 10%. In terms of styles, the best performing style factor was global labor suppliers, led by KLA Tencor and Google. But that's good to see here because that's a risk-on portfolio. Seasonality also outperformed, as you can see here, outperforming by 120 basis points, led by Google, Palantir, Cadence, and CrowdStrike. Okay, well, that gets us to the macro. And I think the key macro to me is it's very obvious. Risk appetite's been improving. I know this has been a rally that has been hated, but let me just give you three things that tell me risk appetite's improved or should be improving. If you're cautious, you should be less cautious. The first is that Bitcoin is made all-time highs, and it's a leading indicator for the S&P 500. So I think that equities are going to follow this all-time high in Bitcoin. And Bitcoin's rise has a lot to do with central bank liquidity, which I think Real Vision has laid out for some time, and it's been very useful. The second sign of risk appetite improving is small caps. I mean, they've broken the downtrend versus large caps here. As you can see, that upside breakout is good. And I think it's really being confirmed by Ethereum, which is a smaller cryptocurrency relative to Bitcoin. It's the second largest. And as you can see, they've moved together kind of in sync. And the rise in Ethereum is confirming the upside break in small caps. Now, there's many other signs, but the third one I want to highlight is that IPOs are back. There was 103 billion of IPOs in May of this year. It's the highest in actually several years. And in June so far, we've had some big ones, like the Circle IPO, which is the stable coin. And that's actually gained 180% since its IPO. And then on Wednesday evening, Chime priced its $700 million IPO. So bottom line, I think that this is still the most hated rally, but I think it means there's still upside. It is, again, as you can tell, you could look around, you've got many people who are skeptical. Skepticism is not a sign of a top. That's a sign of markets that have a lot of firepower left. And as you know, this hated rally is not a surprise. The COVID rally was hated. The 2022 rally post Jackson Hole was a hated rally, and people only turned bullish once markets made a new high. So just be glad that there are people who hate this rally. It's bullish for stocks. And I do think the outlook for stocks is better next year than it was in February. I've kind of covered these before in prior videos, but the tariff visibility is better. There's tax and deregulation visibility. The Fed's more dovish in 2026, and companies survived a major stress test. But I want to explain that again. We had a COVID shutdown, but companies survived. Well, that's good for PE because they survived a stress test. We had a bullwhip supply chain hit companies in 2021, but they survived that. Then companies survived this massive inflation cycle without seeing margins collapse. They survived the fastest Fed rate hikes in history, and they survived this Cuban Missile Crisis like tariff global disruption. To me, 5 of 5 crises in 5 years is an argument for why PE should be going up for the S&P companies. And that's how we're going to follow this, especially through our Granny Shots model. As of the end of June 10th, the price of Granny Shots was $21.35, net asset value of $21.37, and total assets of $1.2 billion. For the past week, Granny Shots has gained 1.13% compared to a 0.89% gain for the S&P 500, which is relative outperformance of 24 basis points. Year to date, Granny Shots is outperforming the S&P total return by 435 basis points and 944 basis points in the last 12 weeks. I'm going to start this video by going over some stock performance of the Granny Shots portfolio. And the name I want to start with is Tesla, because as you recall last week, Tesla had a terrible week because of a feud between President Trump and Elon Musk. And on that Friday of the close, you could see Tesla closed down 14%. Now, our advice to investors was that Tesla had so many advantages, from manufacturing to full self-driving to robotics and AI, etc., that we thought the stock would quickly recover. And in fact, at the start of this week, the feud does seem to have ended between President Trump and Elon Musk. And Tesla stock actually recovered almost all the losses, up 20% for the week.
He highlights Bitcoin's fixed 21 million supply and notes that more coins have been lost than are left to be mined, intensifying the scarcity narrative. With accelerating adoption from BlackRock, sovereign wealth funds, and retail investors, the long-term bull case remains strong. Lee argues that Bitcoin is steadily replacing gold in the eyes of younger generations. If it reaches parity with gold's market cap, that would imply a 10x increase, putting Bitcoin on a potential path toward $1 million per coin. Bold, but far from baseless.
Bitcoin's become a macro asset. And so one of the great things is most people have it on their screen next to gold and silver and the S&P. And, I think back 10 years ago when people thought we were crazy. And now it's an institutionalized macro asset. And, it goes from 110 to 107. That's 3%. That's within the realm of volatility. It's not newsworthy. Now, if you own a lot of Bitcoin, it is. But broadly, I think one of the great things is it's just become institutionalized. We are in a dollar bear market. For the last 15 years, American exceptionalism was the story. Europeans were wildly overweight, and Asians wildly overweight the U.S. stock market. And we have a administration that wants a weaker dollar. They're pretty clear about it. Even in the way Trump negotiates, and you can argue if it's successful or not successful, but by telling Canada they want to be the 51st state and, telling people that they come here to kiss his rear end, it doesn't engender people to say, oh, I want to buy more dollars. And so we're having people reweight their portfolios away from the dollar. You've got a time where we're talking about having a shadow Fed chair, right? There's a lot of talk that the administration is going to pre-pick, in essence, Jay Powell's replacement and have him go side by side with Jay Powell. That's not good for the dollar, right? That's not institutional. And so I think one of the easier trades, and I think most macro funds are having a great year, is they're short the dollar. They're long the euro, they're long the yen, they're long Aussie, there's long a basket of currencies. Well, Bitcoin, gold, silver, platinum, they all fall into that same category as something that's not the dollar.
It's interesting because Bitcoin, there's theoretically going to mine 21 million of them, right, Mike? And in your company, Galaxy Digital, by the way, I think one thing people get wrong a lot on my side of the camera is that you're also a power company. You've got Helios out in Texas, going to grow that as well. It's part of the whole story. You got to make the power. Is there a bull case for not finding any more Bitcoin? I know it probably will be found, but if more of something is bad...
No, there's no more Bitcoin. Like what's unique about Bitcoin as an asset is it was created with 21 million coins total. Period, end of story. There'll never be more than that.
But not all those have been mined, is my point.
Most of them, lots of them have been lost. There have been more Bitcoin lost than will be mined for the rest of eternity. And so you've got this idea of a fixed supply of something. And more people are being brought into the Bitcoin tent. More and more people are realizing this is a story that they want to care about. And so once Larry Fink said BlackRock's getting behind this, right? All that pushing the snowball uphill, it started rolling downhill. And now we've got all these treasury companies buying Bitcoin. We've got sovereign wealths buying Bitcoin. We've got retail investors buying Bitcoin. There's easier ways to get it. And so the adoption of Bitcoin as a macro asset, as an asset to save money in, I think that's now a ball rolling downhill. And the bull case becomes that over time, young people care about it more than old people. And so gold slowly gets replaced by Bitcoin. And so, if you look at gold's market cap and Bitcoin's market cap, Bitcoin has a long way to go, right? 10x.
Wow.
And so that's 1 million Bitcoin just to be where gold is. And I think gold could go from 3,000 to 10,000.
Lee believes we're in the midst of a 15-year bear market for the U.S. dollar, driven by shifting geopolitical strategies and changing global sentiment, with America's credibility under pressure and policymakers increasingly vocal about favoring a weaker dollar. Foreign investors are beginning to reallocate away from U.S. assets. This trend supports the rise of non-dollar alternatives, like Bitcoin, gold, silver, and major foreign currencies such as the euro and yen. Want more insights like this? Click on this video now.